Hi everyone, a very good evening to everyone. Thank you so much for joining us, for our tonight's sessions. So first, let me introduce myself first. I'm Dexter. I'm a dealer from Inter-Pacific Securities. So today's our topic will be covering on our banking sectors. So recently we see since I think it's since last year third quarters lah. So most of the bank are actually moving in a downtrend. Again, we are seeing some of the bank, their share price has dropped 20% or even 10 to 20% now. Then in between these periods, we also seeing our central bank that lower down the SRR rates and also cut down our OPR rates. And recently, we are seeing our banking stock quite a strong rebounding from a bottom. Then I think bringing the bank sectors has contributed and bring out the CI index from almost 1,520 index points up back to 1,580 points like that. So there are a lot of people asking hey, Dexter, whether right now the bank is best time to collect, because since it has dropped so much, they are so-called having a big discount in their banking share price. Then this is a lot of question I receive. So this is why I come up with today webinar, okay, we will talk about banking sectors and how actually the OPR cuts will affect our banking sectors. Okay, so today we'll go to the most basic ones is to cover what is the OPR. Then we'll talk about the functions of the OPR as well. Then how are the bank being affected by the OPR cuts. Okay, and the last one I will be sharing some of the method how actually I will choose my preferred bank. Okay, based on some of the certain criteria. I will be sharing all this. So I hope this will actually help you guys to enhance your investment experience and also help you guys to make more profits in the market. Okay, so without further ado, let's start our today sessions. Okay, so first I have to make some disclaimer first. So all the content and the ideas later I share on is just based on my personal opinions and some of the research that I have done. Okay, and all of these are just for informational and education purposes only. Okay, there will be no any buy or sell recommendation. Just my opinion. If you after you heard my sharings and you want to do some investment decision, please seek for your own reminder and dealer to ask about their opinions and also their advice. Okay, so let's begin with the most basic thing is what is OPR. Okay, so OPR actually is the interest rate where the depository institution they will lend their available funds to the other depository institution. Okay, so in the more simple words okay, is the rates where one of the bank they borrow their funds to the other banks, and the rate they charge what is this is the rate where we call as a OPR. Let's say for example, Maybank right now having a surplus fund in their bank, and then let's say for public bank they have insufficient funds, okay, to maintain their daily business operation. So what actually public bank will do is they will borrow from the Maybank, whereas the surplus parties they will borrow from Maybank, and the funds they will use to maintain and operate their daily business. And of course, the Maybank will not just freely lend out their monies to public bank; they will having charge certain rates. So the rates the Maybank charge on the public bank is what we call as a OPR rates. Okay, so this OPR rate actually is determined by our Bank Negara Malaysia. So every time that they will conduct their monetary policy meetings, then they will come up with a conclusion whether they want to rise, maintain, or cut the OPR rates. Okay, so this will actually affect the OPR. Okay, then whenever the OPR change, we will see there also adjustment in our SPR. Okay, so what is SPR? SPR actually is a benchmark rate where the normal banks that determine use as a benchmark. Okay, and then they use the rates to mark up certain and lend out the loan for you Let's say for example, okay, right now the OPR is like 1%. Let's say it's like 1%. So the SPR is solely depends on means like it's slowly linked to the OPR. So the SPR also be 1%. And then the normal bank, when they determine their lending rates, they will mark up from the 1% of the SPR. Let's say like they mark up 2%. So the lending rate will be like totally 3%. 1% will be the SPR is the benchmark rate. Then the 2% will be the markup rate for them. Then when you borrow the loan from the bank, they'll use the lending rate for you. So you will be charging 3%. Okay, and then when the OPR change, means like when the OPR rise or cut, we will see there are some of impacting some of the things. Like for example, we have mentioned one is the SPR. Okay, the second is will impact on our lending and borrowing rates, and then our fixed deposit rate, amount of money, and the credits, which means like how much of money is flowing in our economy. Okay, then the range of economy variables. So whereas like for example, it's like unemployment rates, our GDP growth, and also the so-called inflation rates. This is some of things that will be impacted by the OPR when there's a change. Okay, So then will come questions like why actually, what is the purpose why the central bank want to cut or rise up the OPR rates? Okay, so very simple one. When the central bank they are seeing our economies are actually slowing down, there will be there's a high unemployment rate. Okay, so what our central bank will try to do is to cut down the rates. Okay, in order to combat with the recessionings that happens in our economies, or like to prevent the slowdown in our economies. Then after they cut the rates, we will see our economy will be stimulated and then address the deflations. And the last one, they're written there is like counter external shocks. Okay, some of the example for like external shock causing our economies slowing down or be in the recessions is like COVID-19 time, no? Okay, and right now we are also facing external shock, like for example the tariff developments. The US tariff is actually causing our economies is slowing down. Okay, so this is some of things how actually is why the central bank want to cut down the rates. And then whenever so when this in the other way, so when the central bank that see there's an overheating, they are too quickly the economies are running, too much of economic activities are running, and then we see our economies are actually overheating, and then we are having our higher inflation rate. Okay, so what the central bank will do is they will rise up the OPR, okay, in order to prevent our economies is overheating, control our inflations, and also maintain the price stabilities. Then you'll be wonder why when the economy is slowing down, then the central bank cut the rates, then will help to slow down, help to prevent our economies being slowed down, or like prevent uh, overheating economies. Okay, so like for example, I do a simple pictures over here to explain how actually they're affecting the economies lah. So let's say if right now the central bank that see our economies is like slowing down, okay, we have higher unemployment rates. Okay, so what the bank will start is to cut down the OPR rates first. Our central bank will cut the OPRs. So when the OPR cuts, we will see our bank will lower down their lending rates as we have explained. The lending rates is determined by two factors. The one is SPR and then plus the markup rates are. Okay, so the SPR is based on the OPR. So whenever the OPR be lower already, so the SPR also be lower. Then the lower SPR plus the markup rate, we will see that the bank will lending rate for the bank will be lending down. Okay, so when the lending rate be cheapest already, we will see our loan will actually be cheapest. Cool. So there's a cheaper loan, people will tend to have more purchasing power, more money to spend really mah. No need to pay so much for the monthly loan already. And then when the loan is rate low, okay, we are also seeing some people they have extra money, then they can buy house and buy car, all this stuff. So this actually causing consumer they are spending more money and save less. So, and then when people are spending more money, there is a more demand in the market in good or services, properties, or like cars, all the things. So we are seeing there will be more productions. Okay, they will be increasing in the productions in order to inline with our demands in the markets, and then we're creating more job. Okay, when all this happens, we will see our nation inflation will be rising. Okay, and then we lower down our unemployment rates and stimulate our economies. Okay, rising in inflation doesn't mean it's not good for our economies. Sometimes we must have certain, I would say, mild inflation's levels in order to make our economies grow in a healthy state. So when the inflation is too low, it doesn't mean a very good thing. We will see our economies also contracting when our nation have lower inflations. Okay, so the next one is when the central banks in the other way. Okay, we see if the central bank are seeing we having our higher inflation happenings in our nation. Okay, so of course start with a central bank first. They would rise their OPRs. There, okay, so the bank will increase their lending rates. So the loan will be more expensive. So when loan be more expensive, consumer purchasing power will be lower already. So people will tend to save more money already, and then they don't want to spend so much of money, okay, because of the tighten money, all this. So we were seeing the demand in the market will be dropping. So will cause a lesser productions and lesser job in the markets. So we are seeing our inflation will be decreased and cooling down our economies. Okay. So we see recently our banks have just announced, okay, they're just having our meetings here, okay, and then they have decided to lower down our OPR by 25 basis point, which is like 0.25%. So they cut from 3% to 2.75. Okay, then they're saying this is because they make a decisions is because they are seeing uncertainty surrounding of the tariff developments and as well as geopolitical tensions. And then they also mentioned at the bottom here, this is actually the preemptive measures lah. Okay, and to preserving our Malaysia's economies are growing in a steady stage, and also because of a moderate, they are foreseeing a moderate inflation prospect, which means like in the futures they are seeing rising in the inflation. So in order to prevent the higher inflation that erode our economic growth, so the central bank cut down the rate first. This is a prevention measure. Okay, so this statement actually you can find in our central bank website where you type Bank Negara Malaysia. Okay, so the first one is their official website. Okay, you scroll down to us. You scroll down, okay, to here. You can see the OPR rates right now is 12.75%. So have a little arrow here. You just click on it. Okay, so the link will direct you to historical OPR rate decisions that made by the central bank lah. Okay, you can see the latest one we'll see is happening recently on July. Okay, then some people may ask, then when actually that we will be having this meeting by the Monetary Policy Committee. Okay, so actually they're also showing their schedule, their meeting schedule in their website. So you go to their website, okay, you click on the topic here, you go to monetary stability, okay, you click on it, okay, then you scroll down until here. You will see the MPC meeting schedule for the year. You click on, so you will be showing like when is the next meeting here. We can see the next meeting is on 4th of September. Okay, then 11 we'll have our second. Okay, so you can find all the statement in here. Okay, so now we go to after the OPR cuts already. Right now, recently we see the bank have cut the OPRs. Then what are some of the sectors that will be impacted, and whether is it positively impacted or negatively impacted? So I have just briefly write some of the sectors. In green one is those that positively impacted by OPR cuts, and then the red one are some of the sectors that will be negatively impacted. Okay, by the OPR cuts. But today our topic is just focusing on banking sectors only. So we will just focus on our financial sectors, which is our bank sectors. You can see is highlighted in red one, which means it's negatively impacted. Okay, but how actually is the OPR cut will negatively impact our banking sectors? Okay, but before we go to that deep, we start from a very basic things is like how actually bank is making money. Okay, so I have make an example here. Okay, a very simple example. Let's say okay, Mr. A here, the green color one, Mr. A here, he have $1 million, so he deposited this $1 million into a bank. Okay, So of course, when he deposit monies into the bank will pay him some certain interest lah. Like what you put in FD, the bank will pay you certain interest, right? So let's say it's like 2% in this example. Okay, so once the bank received the $1 million from Mr. A, he won't just keep the money inside the bank. He will use the money and do lending activities, which means it's borrow to the other person. But according to Bank Negara requirements, they have to follow this SRR rates, which is like 1%, is they have to reserve certain money in the bank in order to meet the daily liquidities. Okay. So the 1% for the deposit for the 1 million is like 10K. So the bank can lend out the remaining money, which is 0.99 millions to Mr. B here, okay, which in the red color one, okay, Mr. B here. So of course, when bank lend you money, he will charge you certain percentage, certain interest. Let's say it's like 4%. So how the bank is making money is what he received and minus out what he pay lah. So in this example, it's like 4% interest minus off 2%. So the bank is actually making 2% of the interest from here. The difference between the interest is what we call as a net interest income. Okay, so right now we have a basic on how actually the bank making money already. Then we come to deeper one. Why are the bank negatively impacted? So when we bring in the OPR, SBR rates and the lending rate come inside this scenario. Okay, so when the OPR is cutting, which means the SBR also be lowering. So the bank have to adjust their lending rate lower because the SBR has been lower already. So they have to adjust the lending rate become lower. So let's say, okay, the SBR lower by 1%. Let's say for example, okay, then the bank is markupping 1% on in their bank. So initially they can they can make like more money. Right now they have to reduce like 4%. Because the FBR dropped by 1%. So right now they can only charge the borrower with just a 3% interest only, but he still have to pay 2% to the depositor. So we are seeing right now if the SBR dropping, the bank is making lesser money, just 1%, compared to previous one before the OPR cuts is 2%. So they are actually making 1% lesser. This is actually how the OPR cuts negative impact the bank profitabilities. Okay, but different bank actually will encounter different levels of impact, negatively impact by the OPR cuts. Certain bank they have they will be encounter a minor impact from the OPR cuts. Some will be facing more negative impact, even though the OPR cuts is the same. Okay, why is it so? Is because of these two factors. The first one is the type of a loan and deposit. Because different bank they in their portfolios they are having a different type of the loan and deposit. Okay, so this will actually cause the level of impact will be different among the banks. And the second is how fast the bank actually can adjust their deposit rates. Okay, don't worry, I will explain one by one, slowly one. So first one, let's see in type of loans and the banks and the deposit. So we know in the general market there's two type of rates. There's a fixed rates and also floating rates. The fixed rates is actually the interest rate that will tend to stay the same, okay, throughout the whole loan periods. No matter how the OPR been changing, the rate they are using in the loan or deposit are still the same, no matter how big or how small the OPR moving. Like for example, it's like fixed deposit, higher purchase loan, and also personal loan. Then the second one is the floating rate. Floating rate is the rate we tend to change whenever the OPR has been changing. Okay, there are some of the example. It's like current account deposit, mortgage loan, and also the business loan. Okay. So, in using this logic, we will see if the bank is holding more of a floating rate loan, okay, they have actually facing a greater INM erosion during the OPR cuts. In other way around, if the bank is holding more fixed rate loan during the OPR cuts, we will see there is a lesser impact on their NIM. Okay, let's say for example, okay. So this is historical OPR decisions made by our central banks. Let's see for like year of 2020s, okay, they have actually made 4 times of rate cuts, okay, in quarter one and quarter twos. Okay, then we choose two banks as our study purpose lah. Okay, I choose Maybank and Bank Islam. Okay, we can see that the structures of their loan are actually very different. We can see the Maybank are actually having more fixed rate loan compared to Bank Islam, and the Bank Islam having a higher floating rate loan compared to Maybank. Okay, by applying the concept just now we have said, suppose that this Maybank will have a lesser erosions in their INM because they're having more fixed rate loan, and Bank Islam should have greater INM erosions. So let's see in this 2 quarter, we can see that in Maybank, their quarters to quarters INM is contracted 0.37%, okay, from 2.23 drop to 1.96, okay. But we see for Bank Islam having more floating rate loan one, we see they actually have a greater erosion in their IMM, which is 0.54%, drop from 2.38 to 1.84%. Okay, then you may ask, hey Dexter, 0.37 is just a very small amount, so small percentage, not even 1%. How big can the impact be? Okay, if I convert it to a numbers, you will see how actually, like how serious the impact is. I'm taking the latest quarters in the Maybank portfolios. We can see that the loan they make to a financial institution is about 1.5 billions. Okay, then the loan they make to their customers is like a retail loan, about 667 millions. So totally they are having 668.58%. Billions in their loan. So whenever the NIM is 2.23%, they can actually convert to IMN is $14.91 billion. Suppose they can make this money, but when the OPR cuts, so we're seeing their IMN also eroded already, so drop to 1.96%, which they can only make 13.1 billion only. So actually they are making lesser of 1.81 billion ringgits. So this amount is actually quite big. Even it's not even 1%, but the impact for the bank is very, very big. So we have to take it, serious. Okay, as even it's not even 1%. Okay. Okay, then the second one is how fast the bank can adjust the deposit rates. Okay, so we can see when the bank they can adjust their deposit rate after the OPR cuts announcement. Means like if they are reacting faster, they adjust faster, they are actually well positioned to defend their NIMs and also maintain their profitabilities. I show you some of the examples. Okay, this is the news made by in the Age. We're seeing that the Bank Negara will start to cut up. They announced they're having a rate cut in July of 11th. Okay, 9th of July. And then this news is made in 11th of July. And then we are seeing all the banks start up within 1 week only. All the banks start to come out and announce that they will cut down their SPR, okay, in order to adjust according to the OPR. So all the banks are actually react very quickly on this. This is because they want to protect their INM, okay, IM profitability. So this is why they very quick react on the adjustment on the OPR. Okay. So right now we know already the OPR cuts have a negative impact on the OPR adjustment on the bank profitabilities. But the question is whether this impact is a long-term impact or just a very short-term impact only. So I would say this impact are just a short to medium terms impact lah. Usually the NIM will normalize within 3 to 6 month times like this. This is because the new loan will be adjusted. So like the new deposit loan and also the loan they make to the consumer or financial institution will be adjusted based on the OPR adjustment. So the existing loan will also tend to mature in certain periods of time. So when the existing loan has expired, matured already, so the new loan they make will based on the adjustment rate. So when all the existing loan has been matured already, so all the new loan coming out with adjusted rate. So this is why we are seeing that the impact of an NIM is just a short to medium term impact only, not a long term one. Okay. Then let's see, for example, just now we're taking 2020 and the Maybank as an example. Okay, we see then starting from the third quarters okay, there's no further rate cut ready. So we are seeing the Maybank NIM is recovering back from 1.96% all the way back to 2%, and then in the next year even back to 2.31%. Back to normalize just within like 3 to 6 month times only. Then we see that the Bank Islam one also the same, dropped to 1.84%, and then they are actually in the third quarter and further, they are actually maintaining and recovering back to 2.36%. So from here we can see that actually the impact on the NIM is just a very short to medium terms impact only. Okay, then right now come to the most important things. Okay, is how actually the OPR adjustment, how the share price will react on the OPR adjustment. Okay, I know a lot of people that invest in bank is to get the high dividends, but the most important things you have to bear in mind is when you're getting high dividends, but the share price itself is keep on dropping, and the level they're dropping, the phase they're dropping is faster or greater than your dividend yield, okay, then actually you are making losses in every year. So we cannot just solely depends on the dividend yield to determine our investment. We also have to see how stable is the share price or how fast the share price drop. If like every year the dividend yield is greater than the share price, so we are actually seeing that throughout the whole year, we are actually making money, because our dividend yield, what we receive, is more than what we have lost in the markets. Okay, so the share price also a very important factors we have to take into consideration when we investing in the banking shares. Okay. So now we will talk about how the share price will be reacting on the OPR adjustment. Okay. So one thing you guys have to know is that actually the share price, throughout the whole research, I realized that the share price actually is tracking on the our nation GDP growth. Okay, if we are seeing that our nation GDP growth is like growing or being uptrend, we will see our share price also uptrend. If the GDP is like in slowing downtrend, we will also seeing our bank share price also dropping. Okay, this is because the bank activities is to that. If the bank have more lending and borrowing activities, of course the bank is making more money. So when the lending or the borrowing activities will be more is when the economy is hot, people are confident in the economies, people foresee that the economy will be growing further on. So people are confident in borrowing money to spend and then to make investment, to expand their business, all in this. So we are seeing there will be more borrowing and lending activities happenings when the economy is growing up, which means the GDP is like growing. So when the GDP is dropping, we'll see there will be lesser lending and borrowing rates, and we also expect the bank will earn lesser money. Okay, first I show you guys how actually you guys can find our nation GDP data first. So first you go to this website, is our DOSM, our Departments of Statistics Malaysia's. You go to their official website, it will show like this one. Okay, then you just have to click on the visit portal. Okay, then you go to the statistic. Okay, you click on the open data. Okay, they will show in here. There are a lot of data like population, inflation rate, employment rate, all this. GDP's one is shown in this economy growth. You click on it, so there will be showing the historical GDP movement of our nations, and there even we will write in here when is their last update and the expected next update is when. So the third quarter they expect will be uploaded on November, 14th of November this year. Okay. So after you guys know how actually where you guys can find this data, then I'll be showing you guys how, like just now I say they are closely tracking the growth GDP movement. Let's see okay. So okay, in this chart we are actually seeing a lot of line, right? So each line are actually presenting one each of a bank. We have totally nine listed banking in our Bursa. So I have put all of them inside here. We can see most of the bank actually they are moving in the same direction, but the levels will be different. I mean, like the degree of rise or drop will be different because of their independence factors okay, but the directions they are actually moving in the same directions. Okay, so we can see in our first quarter of 2016 until the third quarter of 2017 that actually we can see the economy's growth GDP are growing, moving in an uptrend. This is also where we seeing our economies move. We are seeing the share price of bankings are also moving uptrend. But we can see on here in 2016, July 13, our Bank Negara have actually announced one time of rate cut, which is cut 25% basic point. So usually the purpose of a central bank to cut the rates is to stimulate up our economy. This is also where we see our economies will be further going up. Okay, then after 3 to 4 month times like that, around November, we are seeing that there is a stronger movements in the share price. So this is where the share price start to move higher already. Okay, then starting from here, we are facing a higher inflations. So the central bank have to control. So they have rise up 25% basis point. Okay, then we can see around 4 months later, okay, 3 to 4 months later, the share price start to drop already. This is because rising interest OPR is to cool down our economies, where we will expect our economy activity will be slowing down. So this is why we are also seeing our GDP starting to moving in a downtrend. Okay, but then in this period, we see that it's a COVID caused by the COVID, so it's contracted very pretty much until -20s, around 20s like this. This is caused by the COVID-19, which is an external shock we have talked about just now. But we can see that our economy is starting to getting slower when the OPR have rise up. So we can see throughout the whole periods, our economies, our GDPs is getting in a downtrend. This is where we see the share price also moving in a downtrend. Okay, and then in COVID periods, during COVID periods, our economies actually is contracting. It's happening recessions where we are actually having a negative growth in our economies. So the bank have in order to stimulate up the economies, the bank have performed quite lots of rate cuts in order to stimulate our economy to encourage people to spend more monies. Okay, so they have performed 5 times of rate cuts during this periods, COVID periods. Okay, then we see that throughout the last time of rate cuts already, then after 3 to 6 months, we see our economy starting. Like we're seeing the share price starting have a stronger movement now, turn from a downtrend to the uptrend. Okay. So this is where the OPR rate cuts happenings and to stimulate economies. So we are seeing that our GDP are actually recovering back from a negative back to 0% or even a positive numbers. Okay, but during this time, our economists are actually also. If you guys remember, during that time, we are having a MCO where most of the sectors that cannot open, they have to stay at home. So our economists activities are actually slowed down quite a lot, really. Okay, and this is where the time government start to loosen the movement control orders. Some of people or some of sectors that can start to open up and then can start to back to working all this lah. So during this time, we also seeing that our economies has rising quite a lot. Okay, up to almost 16%. And then this big slump is actually caused by a new virus coming up. Which we call a Delta during that time. Okay, then during that time, our government has also announced that the governments want to close down the economy again in order to control the virus spread lah. This is why we are seeing the economy starting drop back to a negative figure, and from here is where we see the government start to really open up the economies with loosen the restrictions on all the economic activities, this and that. So we see that our economies are actually growing back, rebounding. Okay, but I will show you guys during this periods, which I highlight in the yellow ones. During this period, it's a very uncertainty periods where sometimes our economies is like open, then suddenly close down back. So everything is like very unstable. And then during this period, we are actually seeing our share price is in a sideways mode because of uncertainty. Okay, then only this is where the economy starting to open up, and we are seeing the uptrend in the share price because people are expecting the GDP will be growing. There will be more economic activities happen after the open up in the movement control. Okay, and then if you guys still remember during this periods, okay, this periods is where our central bank, our entire global is actually facing a very high inflation status. Our inflation data is spike up very high, so our government start to rise up the rate in order to control our inflations pretty much. So like what I say, during the high inflations happenings in the nation, we will see that our GDP is actually dropping. Okay, so we are seeing that the GDP are actually moving in a downtrend, and there are quite much of 5 times for rising rates in happenings in this year. Okay, so we are seeing our economy has been slowing down. Not to say it's like slowing down lah. It's because economies open up already, so we are seeing economies are starting to running back. Of course, the inflation will following up, so the bank would also have to adjust the rates back to a normal level. Okay, but during this period, we can see the bank also rising quite a lot because of the inflation issue happens around the global. So they also have to rise up the inflation in order to rise up the OPR rates in order to control the OPR. Okay, So we see during this period, our nation GDPs are actually dropping from around 15% level back to normal. It's like 4%. So the contracting slowing down in the GDP, we are seeing our share price, bank share price, has moving in a downtrend. This is where our economies really back to the normal. Everything, inflation has settled, then everything back to stable, and the economy is moving in a healthy level already. So we are seeing the rise in the share price. This is where the parts are. Okay. So until recently, we are seeing that the rise. Okay, this is where also seeing that our GDP also rising. Our bank share price also rising. And if you realize, starting from last year last year third quarters, our GDP actually has been slowing down already, moving in a downtrend. This is where we just now we said quite a lot of a bank starting move in a downtrend because of the dropping in the GDP lah. Okay, so we are also seeing that most of our Malaysia bank shares have moving in a downtrend, dropping quite a lot. Okay, then this is where recently the bank performed the last rate cut. Is in July, 9th of July, okay, in order to stimulate the economies. So now come to the questions is that whether our nation GDP will be further dropping, and then whether the central bank will perform even more rate cut in the futures. Okay, so during this time we have to think whether the tariff, because right now our nation's GDP is dropping because of a US tariff. So we have to think whether the tariff impact is already fully reflected in our economies. My opinions, I would say that the GDPs, our group nation economy slowdown is yet to fully reflect in. I mean, like the US tariff has yet to fully reflect on our economy slowing down, because we see the tariff is just started recently only, and there are still many of the tariff that the Trump would like to impose in the futures, like the semicon, the steel one, the pharmaceutical, all this, and some of them just started only. So the economy has yet to fully reflected lah. So I would say we may see further contracting in our economies. Okay, but based on most of analysts, they are expecting that this year there will no further rate cuts. They are expecting no further rate cuts happening in this year. But I would say if the GDP is dropping too much already, then we will see the central bank will start to cut one more round in order to maintain and to stimulate our economies back to a healthy level. Okay, these are some of factors that we have to think. Okay, consider if we are investing in the bank's shares lah. Okay. Okay, so I have made a summaries like what I have mentioned just now. So long theories. Okay, so I have summarized up. So whenever in terms of profitabilities, when the OPR rising, we will see the profitability will be rise as well. If we are seeing the cut in the OPR, we will see the profitability will likely to drop. Okay, in the share price directions, we will see when hitting on the OPRs, we will see the price will be dropping. If we are seeing the cut in the OPR, we will see the share price likely to rise. Okay, this is this is the summary for just now what we have mentioned on the theory parts, and also I'm showing the graph compared with the GDPs. So this is a summary. Okay, so right now we come to the last things already is how actually, I mean, like what are some of the bank that is worth to be monitored. Okay, so I have actually, I will in this, and here I will share some of my criteria on how actually I will select my bank stock lah. Okay, and I have highlighted some. I think just my personal opinion, not any buy sell recommendation. Just my personal opinions. I think I have highlighted some of a bank, okay, that I think is worth to monitor. Okay, so this is I have compounded all the bank data, okay, in this table. Okay, we can see we have like dividend yield, the ROE, PE, non-interest income, and the fixed rate loan proportions in their loan portfolios. Okay, so you can see I have highlighted three of the banks that I think is worth to monitor. Okay, so usually what I will consider when I choosing the bank, especially I'm choosing the bank stock, especially during the OPR cuts, is I will look at their loan portfolios, like how heavy the fixed rate loan will be spent in their portfolios, and how many percent the non-interest income will stand in their portfolios. Okay, just in case some people they don't understand what is non-interest income, I will explain a bit. So non-interest income actually is the income where the bank generate based on the non-interest. Like for example, you apply for credit cards, you have to pay for your credit card annual fee. Okay, the fee is what considered as a non-interest income, and then the supplementary card also known as non-interest income. And one more example is the brokerage. Some of the bank that provides platform for people to trade, buy share, invest, all this. So basically, they will charge you a brokerage fee lah. The brokerage fee also considered as a non-interest income. Okay, so this is the non-interest income. Okay, so the first criteria is if the bank have, I will consider those banks that have more fixed rate loan in their portfolios and they have a higher non-interest income, because this is indicating they are more well defend against the negative impact from the OPR cuts. Okay, this is the first factors I will consider. The second one, of course, I will consider about the dividend use. Okay, we buy bank stock. We also want to the shares generate a higher dividend yield for us lah. So definitely, I will choose those with a higher dividend yield one. And then the third one is our comparison between the ROE and also the PE. I like those bank that with a higher ROE than the PEs. This is because PE ratio is like how much you are paying, okay, for every 1 cent. Like one cents they are every 1 ringgit they are making. Okay, so let's say for example for CIMB case, every 1 ringgit they make, you pay them for 9 ringgits on their share price. This is what they indicated. So I like those banks with a higher ROE one, because every 1 ringgit I invest, actually they are using it to generate more returns for me. So for those with a higher ROE than their PE one, usually I will have a look on their share price. Then the fourth one is the price to book. Usually I will find those with like below 1 month. But it's very difficult, every criteria to hit. So from here, I have highlighted the first one is the CIMB. We can see that the CIMB actually have quite an acceptable level on their fixed rate loan and also non-interest income lah. Okay, this is where they will be more defensive against the negative impact on the NIM. Okay, and then CIMB also providing the highest dividend yields, almost 7% compared to the other banks. Okay. Then the CIMB bank also having a higher ROE compared to their PE lah. So this is why I think it's worth to monitor. And then Maybank also, but Maybank are actually having a lower ROE compared to their PE, and their price to book actually is also higher than 1 ringgit. But why I choose Maybank is because Maybank actually they have the highest fixed rate loan and also highest non-interest income among all the banks. So I can say the Maybank are the most defensive banks against the OPR negative lah. This is also why I think that the Maybank is worth one. The last one is RHB Bank. Then you will realize here like why so different one Dexter. This one RHB Bank have the lowest fixed rate loan amongst all the banks. Then why you choose? Okay, why have highlighted this one is because this is the other way round of thinking. It's like when right now we are seeing the OPR cuts, but if the economy is coming back, growing back, we are seeing our economy is getting hotter. Okay, then of course the central bank will start to rise the OPR cuts in order to control the inflations. Okay, then will this bank with a lower fixed rate loan one, okay, will have a battle, will be the most beneficial. I mean, like, but the most benefited from the OPR rise because they are having higher proportions in the floating rate loan. This is some of the factors that you have to think when in the different economic conditions and different things happens. Okay, and then our which also provided quite a good student yield 6.84%. Okay, they're also having their ROE higher than the PE ratio, and then they are also having the price to book value even just below 1%. Sorry, it's one times. Okay, so these are three of a bank that I think is worth to monitor. And to be mentioned, this all the data compounded here is on 8th of August, which is I do this before the bank has risen, and you can now look back like how high the CIMB Maybank have been moving recently. Okay. So, I have to mention again, all these are just my personal opinions, not any buy or sell recommendations. If you after you mean like listen to what I shares, you want to make a investment decision, you want to buy any of the shares, please consult your dealer or remiser. Okay, ask their opinions. All right. Okay, so now that's it from what we are sharing tonight. And then now we are back to Q&A sessions. Okay, if you have any question you are not clear, you want me to explain again, then you feel free to drop it in the comment. Okay, I will answer it accordingly. All right. So meanwhile, when I'm waiting for the questions, let me do some ads first. Okay. So if you are don't know every day, you are not sure where our markets is moving, where are the opportunities in the market. Okay, you are free to contact me. I will every day I will be sharing some of the opportunities or the targets. Okay, targets counter and some of directions where the market is heading to every day. Share to my clients lah. So if you are my clients, okay, you want to ask more about, I mean like more than what I share, you can just feel free to contact me, scan the QR, and then drop me a message. Hey Dexter, I want to know what, then I will answer it accordingly. Okay, or if you feel shy, you are not sure whether how are the banks are I mean like what are some of the bank that is worth to monitor one, you can also ask me, drop me a message that I will explain accordingly. Okay, then if you are not our client, you wish to get my advice in your shares or trading, you can also message me. So but according to Bursa requirement, I can just advise on my client, so you can be my client, so then I will advise you accordingly to your personal needs and your questions. Okay, so feel free to scan and message me, I will answer it shortly. Okay, so that's it from our sessions tonight. Okay, so this is what will be shared tonight lah. Okay, so thank you so much everyone. Okay, let's see any questions in the comment sections. Okay, there's actually one questions. Okay, the Yong Hong. Okay, so he asking which bank will follows the GDP up and down the most. Okay, so let's see to the back to the back to the graph here. You can see that every time when the GDP rising or dropping, CIMB always tend to be moving the most rapidly one. Then the BIMB will tend to be the slowest or moving the lasso. The most of the time lah. You can see if you have time, you can look back on the charts. Okay, you can put all the graph in the line charts, then put all in the graph. You can see every time when the GTP go up or down, CIMB tend to leads the markets one. Okay, do I answer your questions, Yong Hong? Okay, is there any other questions that you guys would like to ask? Okay, if no, then thank you so much for your time to join our session tonight. I hope my sharing here will help you to make more profits in the market and smoothing your trading experience. Okay, so thank you so much, and that's it from me today. Okay, and I will see you in our next seminar. All right. Okay, thank you and bye bye.